Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, November 1st, 2017. Let's get started. I got a lot to go over. What I've been saying was that what I was waiting for was this wave 5 to complete. There is options that it may have completed here, but once we got this gap up and we went above it, obviously it wasn't completed, and this was the 4. And what I had said when we were here is that we didn't have any bearish divergences in place, and that it probably would have made more sense to go up and make another new high, because that would have given us a 1, 2, 3, 4, and 5. So that would have been our 5 waves up. So we have enough waves to count this complete. Is it going to extend? We'll find out. But as far as a wave structure, it's very mature, and because we have the 5 waves up, so it could turn at any time and make perfect sense because everything is in place for it. Now again, if it extends, it extends. Well, the earliest clue that we're going to have is going to be a break of the 2570, where it comes down and then is used as resistance, and then really confirmation is going to be when we break through the 2547. So, wrap up. We have enough waves in place. What are these blue lines here? Let me zoom in here and I'll show you what I'm looking at. Now, what I see playing out or could be forming, again, this is way early. I just try to look at different patterns that are in play and see if they may be forming, and it may be something that we have to keep an eye on. So this looks like it could be a left shoulder, came down. This is the head. Now, what would make sense, it could come up and we could still be making the head of this right here. But if it went down, I would expect this somewhere around that 2550 to hold, and then we get another bounce back up to the 2580. Now remember what he was saying, where we were looking, he's expecting to see some choppy strength into the 13th. So choppy strength does not mean that we have to keep making new highs. It could be choppy strength where we come up and down and up, but we just keep kind of hanging around this area. So that kind of fits the pattern on it, where we know what we're looking for on that end of it. So this could be a possible pattern that is forming, and like I said, we have enough waves in place. We have the bearish divergences very overbought, so this is something to keep an eye on. So let's go to a 15-minute chart. And remember, I was showing you this reverse symmetrical triangle, and I said don't be surprised to see it come back up and touch the trend line. Now, with these types of patterns, it's common for it to actually break through it a little bit, but you can see once we got up into these levels, we saw selling again, and the highest actual print was in the first 30 minutes of trading. So they did the whole gap up thing. They found selling again, closed the gap. Now that's the reverse symmetrical triangle, and where's the target is looking for, and it's down to that 2540 area. So remember what I was showing you with the with the possible the head and shoulders pattern here. What I'm saying is the 2540, but the way that we could look at this as far as a neckline could be that it's actually a descending neckline. So it could come to where, the shoulder is here, that this is the head, and then this doesn't, form the neckline until we come down to this 2540, and then from there, that's where we get the bounce back up to somewhere near that the 2580 area, and then that would start the shoulder. So that is supporting this pattern here. Now, what about these smaller patterns? So remember, I show you the what are the patterns called? The bearish wolf waves. So basically, they're a rising wedge, and here's your line 1, 2. This is 3. This is your 4, and the wave 5 breaks through the trend line right here. So this is the pattern right here. Now, what the target is the bottom here. So that brings us down to the 2563 level. Why is that important? Well, let's go to a 5-minute chart. And here you can see that we could be forming yet another bearish head and shoulders pattern. We have we actually don't really have bearish divergences because of this gap up, but a lot of times, so maybe they got to come back up. I don't know, but let's just say this is it right here. This is the head. So look where the, we're looking at a neckline that could come anywhere down to that 25, 68, 63, somewhere in there. We don't know where the neckline would be, but what it's calling for is, some type of move to come down and form find support somewhere in this area and come back up and make the right shoulder. So this will be the left shoulder, this will be the head, and this is the right shoulder. And from there, the pattern wise that it would be looking at is about 18 points from this area, which brings us down to that 25.50 area, which is pretty close to where I was talking about where that neckline would be. So they're lining up it's those things that were yeah, the S&P was up 4 points. It was up 12, I think, at one point today. And it was, we're just seeing that they're not able to hold this, and the majority of the move is being done in overnight trading with a gap up, and the high is made within the first 30 minutes of trading. But we have these patterns that they're topping patterns, whether you look at this head and shoulders here, whether you look at this reverse symmetrical triangle, whether you look at a smaller head and shoulders. So the patterns are topping patterns. It's just a matter of when is price going to follow through on them. And like I've said, the first really sign is going to be when we break through the 50-day moving average on the 15-minute chart, which is right around that 25.78, right where we are. But it's going to be more important at this 25.70 because this is the 200-day moving average. And if we go to a 60-minute chart, you can see that that's also matching up with the 50. So right now, I think the first clue is going to be if they could break through this 25.70, and then really once it gets through this 25.47 is when I believe that we could be saying, okay, this is in place. And then what we would be looking at as far as a target would be someplace down here. So I'm not worried about this right now. What I really wanted to show you is that we have enough waves up. We have several different topping patterns that are in play. And now we just have to see, is this wave 5 going to extend more? Or are we going to start to see some selling pick up? And I don't think it's going to be any kind of complete breakdown because, like I said, there's the smaller patterns that are trading within, say, a larger pattern. So even if we do get a big break that comes down to, say, the 25.50, so maybe down to the 25.40, there's still going to be probably a rally back up to this 25.80 area. So it's not going to be just one of these huge breaks, but it still could be a 40, 50 point drop before we get another 40-point drop to the upside. So there's going to be some opportunities, I think, on both sides. But the fact that we have the 5 waves in place, you have to be just a little more cautious than you've been, because that is suggesting that this larger wave 5 is complete and we have the bearish divergences in place, and that would be setting up for a target down here. So with that, I'm not going to be guessing anything. I'm going to wait for some pivots to be taken out. Nothing has been done yet on that. So maybe they try to extend it, maybe they break down, but we'll know that soon enough. And if it is going to break down, then what's going to happen is it's going to give us some pretty good trading opportunities on both sides. So with that, have a great night, and I'll talk to you guys.